mean, IBM used to have 90% of the market for computers, and look at what happened to that. So is Google the next IBM?
Google have had their results, and on the face of it, they're not great results. But the company itself, 100 billion in profit, 350 million revenue, projected to still be increasing. Cash, no debt. Is it really as good as everyone makes it out to be? Here, the book value per share is $26.6, and we're trading at $185. I mean, I know blue chips trade at many multiples, but I think you've highlighted a couple of really good points in those results that we've just had, that even with the buybacks and things like that. So touch on some of that.
Well, the market didn't like those results because the share price is down 10% since the results. I mean, on the face of it, any company with $350 billion a year in revenue, $100 billion a year in profit, you think, wow, that looks great. I'd love to own that. But if you actually look behind those numbers, you have to say, is it as good as it first appears? Is this company actually generating cash? And if you look at 2024, you look at actually how much cash it generated. Well, it actually, when you take into account the share buybacks and the capex spending, it actually has negative cash flow of 2.5 billion. So that is the first surprise. And so let's talk about the capex. Now, generally, when these capex accounting rules first came out, probably more than 100 years ago, they were for serious capex, for factories, for railroads, for businesses that you're buying long-term assets that are going to produce profits. But what you got to ask yourself with these tech companies, and obviously we don't know exactly what the capex was spent on, but if you're assuming that it's buying things like the latest chips, the latest hardware, these items depreciate very, very quickly, maybe in less than a year in some cases, because these chips are like the NVIDIA chips need to be replaced.
They have a Willow chip, don't they?
Their
chip's the Willow chip, yeah.
Yeah, but these are going to be replaced potentially every year or 18 months. So, if they're depreciating them over 5 years or longer with the capex, well, I would argue that this capex, the projected 75 billion capex for 2025, I would suggest a big proportion of that needs to be written off immediately, and it shouldn't be capex, it should be operations, because it's going to have to keep up with these Chinese companies, to keep up with even the domestic competition that Google have in search, and there's a lot of it. They're going to have to keep spending this amount of money potentially indefinitely. So if that is an annual expenditure, then they're not making $100 billion a year. They're making, with 75 billion capex, they're making 25 billion a year. And then they're also doing these share buybacks, which is the other big expenditure. Now, I'm not a fan of share buybacks because it does nothing to increase the profitability of the business for the shareholder. Google have bought back last year. It was about 65 billion in share buybacks they did. So some of that's expensed by when they grant options to employees, they have to expense some of that. So I think they expensed 22 billion last year, but the rest is not expensed. Are we at the beginning of the end of Google? That's the question. What do you think?
I'm really interested by some of the points you make. I mean, yeah, top line, it looks great, 350 billion, 100 billion profit, but clearly they don't put that in the results where they spent 65 billion on buyback and 75 billion on capex, and like you're saying, like overall they're actually losing money. That's a huge red flag, and they're going to want to continue the buybacks because the options that these guys, they're not founders, they're just got options in the stock. They want to pump the price up so that they can take the profit on their own options, and it's creating that you can see a bubble there in itself.
Well, that's the playbook for executives that don't create their own businesses. They award themselves these options at lower prices. They pump up the share price with share buybacks, cash out their options, and they made $100 million, $200 million without actually having to found a company or take any risk whatsoever. Which is why I, as a founder of businesses, I'm totally against these share buybacks.
It feels illegal.
And when you look at the number of shares in issue, given in relation to the number of shares that have been bought back over the last number of shares in issue, has only lowered by about 11%. So they've only lowered by 1% per year. Yes, to me.
Yeah, only 1%.
That much higher proportion of this share buyback cost needs to be expensed. And the fact that Google actually lost in terms of cash flow 2.5 billion last year, despite 100 billion headline profits.
That's a good point.
Suggests that this business is not as good as it first appears.
Yeah.
And need to be looking at this stock very carefully and say,
Just looking at the technicals, as we said there, the 200 period moving average at 175 with the gap fill there looks like a great buy. I mean, it's bounced there.
like, look at what happened the last two or three times I hit the 200 moving average. It bounced every time. So
And,
that's going to do it again.
yeah, and the really funny thing is when you see it fall through, yes, it can go further. I mean, it's gone for 40% further, but even from here to there is still, 15 to 20%. But what's funny is this time here and this time here where we've fallen below, all you got to do, and it's very amusing to watch, is why we like to think we're providing great free value on this channel and giving you the indicators that people spend, years trying to figure out. I mean, look at that. Where did it fall down to? You just go on the weekly, and then that's on the weekly, and that's where it's fallen down to on those two times where it fell beyond the
if you get in somewhere around that period where it was just below the 200 moving average, then you've done well.
Yeah, you've done very well. Imagine buying, amazing call options there, and because you know that that's going to be a volatile time and potentially an explosive move up, you could be easily calling in for it to just get to there.
Of course, the time to buy is when it goes. It goes through the moving average on the downside. You want to buy when it actually crosses the moving average and the way back up again.
Yeah, it crosses back over.
Yeah.
And that level there, so it was 175 on the daily, and then on the weekly it's 134. So yeah, you're just keeping an eye on those things and seeing where they could go. But I think that's
Google's your Alphabet, as they call it now. It's a good stock to trade, and it very much trades with the Nasdaq. The overall market sentiment is very important to these mega cap stocks.
Yeah.
And saying, is Google the future, or is someone going to come in here and take over from Google? And let's look at the competition that Google has. They have a lot of competition on the search front. We've got X potentially getting into search. You've got all these AI companies looking at search, like Perplexity, the AI search business, which is potentially much better than Google. You've got OpenAI going into search. So the question is, Google, it's still got 88% of the market for search, but how long is that going to continue? I mean, IBM used to have 90% of the market for computers, and look at what happened to that. So is Google the next IBM?
Yeah, no, I see really good points.
Because where's the brand loyalty with Google? I mean, nobody says, Google's my brand, I have to use them. Who cares? You're going to go where you get the best search. You're going to go where you get the best. We're talking on YouTube now, but if something better comes along that gets more views and has got better features, we're going to move. There's no brand loyalty. That's the point. Nobody cares whether they use Google. They use it at the moment because it's there, because it's been the best. But if you look at the search results recently, they're not very good, quite frankly. There's a lot of AI generated content in the search results. They're completely woke. If you use Google's AI, personally, I don't like it because you've got all these woke warnings. You get risk warnings everywhere. It won't do some things you ask it to do. Just on the point of bankruptcy, Google has actually already gone bankrupt in one country, which is quite an interesting story in itself. Google actually declared bankruptcy in Russia because of fines and all sorts of things that are happening there. I say it a little tongue in cheek. Obviously, there's a bit of a political motive for Google to be bankrupted in Russia, but this is an example of what can happen to not just any company, but any individual operating in any one country, which is why no company or no individual should operate only in one country, because you leave yourself very vulnerable. So what happened? Google didn't comply with orders to both remove content and to maintain Russian content in Russia, like the Russian TV channels and so on that they banned from YouTube. So they got a fine in Russia, which started pretty low, a few million, but because it doubles every week and because Google didn't pay it, the fine has now reached. It's going to be more by now. This is a number from December, but it's $20 zillion. Now nobody knows what a zillion is, but a zillion is a number with 33 zeros after it, and that is bigger than the whole global economy by some margin. And this is still doubling every week. So Google is, if Russia could enforce this fine against Google anywhere else in the world, Google would be bankrupt. Fortunately for Google, they can't, and they recently went to court in.
I mean, they're getting fined just for ignoring it as well.
They're getting fined for ignoring it. But the point is, everybody says, well, it's Russia, who cares? But this shows the immoral nature of every government in the world. Do you think the EU, for example, wouldn't hesitate to do the same thing to X because they allow information that the EU doesn't like. They wouldn't hesitate to do it. So any government, any political entity can do this to any business, which is why we all have to protect ourselves, both our businesses and as individuals, by diversifying internationally, so that if we're targeted by one government, then our assets remain safe in other places. But yeah, Google, this could happen to any company anywhere in the world, and it's just an example. It's ridiculous. I mean, it's crazy. But it can happen. It has happened to Google. Their business has been destroyed in Russia. Russia is a major country with more than 100 million people, and Google had a major business there. They had their bank accounts frozen in 2022. They were forced to declare bankruptcy in Russia. So the Russian government basically took down this enormous multinational company. And my point is that this shouldn't be shrugged off because it's Russia and because they're seen as a political enemy. This can happen anywhere and with any government that doesn't agree with your point of view. And I say the EU is the most obvious example, and they have publicly said they're going to come after X and no doubt try similar tactics that happened in Brazil to X. I think these political risks for any company are worth looking at. Okay, we're talking about Google here. You can probably ignore this and think and know that it's not going to
come to anything. I mean, Russia's done a interesting thing here. I mean, they're probably never expecting this to get paid this figure anyway. It's
impossible. I don't think there's that much money in the world.
Yeah, exactly. Which is laughable. But they're probably thinking, well, if we fine them this much, and they have done dodgy stuff like all of the censorship during COVID, like you're saying, I actually didn't know the point about it was to do with Trump being deplatformed, that they were sort of half protecting him. So that's an interesting point. But they're probably expecting, well, if we fire them this much, maybe we'll probably get a couple billion or a billion or whatever. Because they definitely were in the wrong, and they're kind of just
many times these big companies are forced to capitulate and do deals.
And it's not just Russia; it's everyone basically outside of the US. I mean, there's this, we're talking about BRICS on other videos, but if one can band on a wagon of trying to take down one of America's bigger companies, then why not? And China doing this antitrust probe into Google as well is just more headline stuff. I mean, there's been a lot of China news as of the last few weeks with DeepSeek and things like that, but it's just adding more pressure to obviously the stock. And I mean, where I see it going, I mean although we're talking pretty negative, potentially damning for Google. I mean, things could change. Maybe they get acquired. Maybe they stop with all these non-execs taking money in creative and slightly dodgy ways. Maybe Google do get acquired, not by one of the other companies that you mentioned earlier. I have no idea, because I mean, YouTube is a great platform. It's difficult to believe that it could no longer exist in a decade or a few years.
But maybe YouTube would be better as a separate entity, as a separate major company.
Good point.
With different management, you can make the point that sometimes these businesses just get too big, and they get too big for any one group of individuals to manage.
I mean, even on the technical side of it, I mean, it's quite easy to read the technicals on blue chip companies, like tracking this 200 period moving average. So there is potentially a buy here with a gap fill there. Down to the 200, that could still be a pretty big buy. I mean, it's a shame we didn't do the video a couple of days ago, because we'd have caught another 5% move down.
Yeah, it looks like that gap is ready to be filled pretty soon and hit the 200 moving average, and then it will likely have a bounce off the 200 moving average.
Yeah, it probably will have a bounce, and obviously we're potentially so early to this sort of bandwagon of calling the end for Google, but things can go on for ages, and we're not saying short.
Well, I don't
probably going to bounce, and I reckon it'll go to all-time highs again. But it's being very aware of does that trend continue? Do these results get so bad that actually this 100 billion figure that looks pretty, although it's a negative number really because of the buybacks and because of the cap expenditure, is that trend going to start to go down? That is what we need to keep an eye on.
What we're talking about here is mega long-term trends. Nobody's suggesting that Google is near the end anytime soon. We're talking 20, 30-year trends. But things with AI are moving so quickly that you can see Google losing a big part of their core market pretty quickly with new technology. If Elon Musk X, for example, start a new search engine that is better than Google, people are going to use it.
Yeah, and I think he is doing that at the moment with Grok and with X payment. People are rumoring that it's going to be Ripple that are going to collaborate with X to do payments and just be the all-in-one platform and take over YouTube. I mean, I'm not totally. He hasn't confirmed that, but I can see how it's possible. I can see how even Elon was at PayPal and one of the founders there, and all those people went on to do crazy big things. And clearly, there's a soft spot for payments. So, Ripple potentially collaborating with them, I wouldn't rule that out either. But just going back
I think the point is Google are under attack in every area of the business.
Yeah.
Because of the biggest, they've set themselves up as a target, and of course, everybody wants to be the biggest and the best at what they do. But it means that the target is as that's what competition is about. And so somebody, either Google will get better or they'll be outcompeted.
Yeah.
At the moment, it looks to me like they're being outcompeted in many areas, and they have to up their game, and hopefully they will.
Yeah, and
that's the reason for the 75 billion in capital expenditure next year, because they know they have to spend to up their game. They're very aware of the threats that they face.
Yeah, no, it's they're clearly they're whilst they might not be talking about it, their money is showing what they're doing. It'd be interesting to see what institutions and Google's maybe even top shareholders start to do. But yeah, it'd be interesting to see what some of these top Google and institutional shareholders start to do when they aren't able to maybe fix some of these things and change things and maybe stop the buybacks. I mean, stopping the buybacks would be a good idea, but at the same time, then it'd be more up to the market to decide how the stock trades.
Please don't forget to like, subscribe, turn on post notifications, and join our Discord chat room linked in the description so you can see these plays and get in these opportunities when we do.
In the modern world, great leaders resolve their conflicts with words.
As for me, I like the stock.
Order filled.